Well, the Australian dollar right now remains subdued against the US dollar, the pound and the euro. But there's one major global currency against which it is booming, and that is the Japanese yen. You can see our dollar right now. Let's just have a look. 104.42 Japanese yen, and that's close to its highest point in 33 years. In fact, you've got to go back to the 1991 recession to see it higher than where it has been today. Now, to explain why all this is happening, let's bring in here Steeve Dooley, the currency strategist with the foreign exchange payments company Convera. Steven, many thanks for your time today. Just explain what's happened in Japan. I know there's also been inflation numbers out there today again that have come in under what was suggested. So what's happened? What's the difference that's caused the currency to bounce?
Yeah, thanks for having me on, Ross. That's absolutely the story that's been driving the Japanese yen lower for the last couple of years, with the rest of the world so concerned about inflation and needing to raise interest rates to try and contain that inflation. The fact that Japan has managed to get through without too many inflationary pressures coming through means that they haven't needed to raise rates, certainly to the extent the rest of the world. They raised rates a couple of months ago for the first time in over a decade. But up until then, they were the very last of the major developed markets to raise interest rates. So in Australia, for example, where we raised interest rates from 0.1 to 4.35, in the US, where they raised rates from around 0.25 to 5.5, all of those moves to push interest rates higher, push their currencies higher. And while Japan was unable to raise rates, that meant that the Japanese yen just languished. So it's been a very substantial trend where the Japanese yen has fallen versus most currencies, but most notably, of course, versus the Australian dollar.
Yeah, but the one thing here is that quite clearly in Japan, they've had trouble being able to get any form of inflation in their community. They've got a very ageing population. They've got very poor productivity. So from that point of view, it is not really, if you like, the great economy that many people would have imagined it was back in the 1980s. The collapse they had after that really did, if you like, leave it with a generation or more than a generation of really economic malaise.
Absolutely, and you said it right there as well, talking about the 1980s. They had the mother of all asset price bubbles in the 1980s. It burst in the 1990s, and some people will say that the collapse in asset values, like we saw in the 1990s in Japan, is one of the main reasons it's such an explosive burst in valuations, leaves people scarred for a generation. And that's one reason. Of course, as you say, productivity, but also the ageing population of Japan. Think about your own experience. Do older people spend more than younger people? Maybe in Australia, but historically, that's not the case. And with that ageing population, that's also seen a slowdown in spending. So, like you say, it's been a generation, a lost generation, where they haven't been able to drive productivity, they haven't been able to drive wages growth, and they haven't been able to drive inflation. And as a result, interest rates were really negative in Japan for most of the last decade. And negative interest rates tend to weigh on your currency, and that's what we've seen in Japan.
The other thing also is that obviously from an Australian perspective, I mean, even with a payments company such as yours, Australians take advantage of these opportunities. And so, Japan is one of our key travel destinations offshore. And while travel to Europe and the United States might be very expensive right now, travel to Japan is relatively cheap. Certainly if you can get out of the big capital cities where the accommodation is more expensive, and also even investment opportunities must be better there right now.
Oh, absolutely. And if you look at the Japanese share market over the last 3 or 4 years, it's exploded higher. It's back towards the peaks that we saw in 1990. And there are some observers that just thought that was never going to happen. That's been partly because as the Japanese yen falls, you can find a better investment proposition in Japan as well. So all of the money right around the world, it's heading towards Japan. It's not heading out of Japan, because think about your Japanese consumer. It's going to cost a lot of money to have a week in New York now and to see some shows in Broadway. So the monies are really one-way traffic back into Japan, whether it's tourists or investments. And like you say, as a result, it's a once-in-a-lifetime opportunity for people to travel to Japan. Many that might have to rethink a holiday in Japan or Europe at the moment with the
Yes.
Aussie relatively weak versus those currencies.